Welcome back to my channel. My name is Wade. I'm an enrolled agent with the IRS, and today we're going to be talking about several tips and strategies to minimize your audit risk when filing your taxes as a self-employed individual, single member LLC, or just a sole proprietor. Before we get right into it, smash the like button and subscribe. So if you normally file a Schedule C with your taxes, that would be anyone that has a side hustle, anyone who has a business that's like a LLC, but a single member LLC. Most likely you're reporting that income or loss through your personal taxes. So in this case, if you have expenses that you're writing off for these businesses, don't put round numbers. For example, if your cell phone bill for the year was a certain amount of money and you kind of like forgot and you just want to do a rough estimate, do not put $1,000 for cell phone or 3,000 for insurance or 10,000 for rent. That looks very suspicious because you can't really fool the IRS because they know those type of figures most likely will not end up being round numbers. It'll be something like 10,345 and 23 cents, for example. So you have to look at your expenses and make sure that you're not reporting round numbers. Round numbers is the easiest thing to trigger an audit. So make sure you're not doing that when you're filing your taxes. Now let's go to the next step that may trigger an audit. For example, let's say I'm a self-employed individual and I sell fidget spinners or something like that, right? If I have 25,000 of expenses, right? Let's say 25,523, 25,523 of expenses. I cannot have income 25,523 as income. What that does is it gives me a net zero, like even zero. That triggers an audit because the IRS knows that, hey, what are the chances that this person had this amount of revenue and identical expenses that offset to zero? So you do not want to do that. You want to make sure you report things correctly. And if you have a loss, you report a loss. And if you have a gain, you report a gain. Do not make it flat even. Okay. Next is expense categories. Certain expense categories are more likely to trigger an audit. For example, for mileage and meals. Those can trigger an audit if the expense is higher than usual. Next, we have the home office deduction. That one can create an audit because usually what individuals do, they claim a super high percentage of home office deduction on their taxes. And that can often trigger an audit because the IRS is going to be thinking, are you writing off the whole house? Or like, what are you doing? So you have to be careful when using the home office deduction, okay? You have to keep in mind that the IRS only allows $5 per square feet up to 300 square feet. And you have to multiply that, which is 1,500 times 12. That'll give you the maximum you can claim for the year as a home office deduction. Next step is you need to report all income that you receive for the year. Any W-2s or 1099 have to be reported on your taxes. If you miss any of those, it will automatically trigger an audit. If it doesn't trigger an audit, you will get a form called CP20 or CP02. I forgot which one that is called. That pretty much means that the IRS is going to either make an adjustment to your taxes based on the information you didn't provide. If you got a W-2 or 1099, you did not report it on your taxes, your employer who gave you that 1099 or W-2 reported it to the IRS. And if you don't report it, it's not going to match when you get there. And it's going to automatically trigger that audit. And then they're going to look into all your tax information. Or it could be as simple as the CP02, which then does like a tax adjustment. So therefore, they'll let you know, hey, you owe this amount, just send it our way or whatever the case may be. So that's what would happen if you miss any income that you received and you didn't add that on your taxes. If you have any questions, please leave them in the comment section. I'll do my best to swing back around and answer every question. Please smash the like button and subscribe.